Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, boy, oh boy, it was a wild ride today. Um, the basically what happened, of course, just for kind of recapping it, is that the retail sector took a dump. First, it was yesterday it was Walmart earnings. Today it was Target earnings, and wow, they were really off. And it just it's amazing. We had a follow through day, and then boom, we we went straight down. So just a really kind of disappointing day here. I mean, we moved we moved to a confirmed uptrend, and then there was a distribution day. So basically now, if you'll notice, we're at a market trend under pressure. So not the greatest not the greatest thing out there. But I did want to show you this little video that I made this morning. It's about a trade that I did today, and it's essentially a bear put spread on Ross Stores, which is going to be announcing tomorrow. So take a look. Hello, everybody. Jim Malone here from Dallas Trading Floor. Well, how do you protect your capital? That's so important in a downward trending market like we've been experiencing in the last few months. Well, the way I do it is by setting a stop loss. Now, not everybody is familiar with a stop loss, and I'm going to show you how I set a stop loss. 16th of May, I bought 70 shares of FLNG at a market price of $28.37. To calculate the stop loss is very easy. All you do is type in the price per share, in this case 28.37, and then multiply it times 0.93. That will give you a stop loss value of 26.38. Now, with my broker, Charles Schwab, I first go to the trade key and then input the symbol of the stock that I just bought. That would be FLNG. I then select the stock ETF, and then I select the action. In this case, I'm going to be selling. The default quantity is 100, but in this case, I only bought 70 shares, so I would put in here 70. And then I would go down here. This is the order type, and I would go to the stop. Notice how this changes to the stop price. This is where you put in the amount that you calculated. In this case, 26.38. And then on the timing, I change that to good until cancel. Then I press the review order. It gives me an amount, and then I circle down, and then I place the order. Now, to check the order status, I click on the order status, and then I look to see, FLNG, sell 70 shares at a stop price of 26.38, expires, and this is the good till cancel, 7/18/2022. Generally speaking, it will give you 30 to 60 days on that good till cancel. You can change it, but that's typically the default. There are several different kinds of stops. Most of the time, I use the market stop. And basically what that means is that if the price falls below 26.38, then there's an immediate order to sell at the market price. Currently, the price of FLNG is $29.39. But as you can see by this alert, if the stock is to fall below this level, the stock will be sold out. This protects your capital basically at 7%. So if it drops below 7%, you will lose only 7% of your capital. Remember, protecting your capital is one of the most important things that you can do. So when you buy a stock, set the stop loss at 7%. Good till cancel. Well, basically, that was just a little tutorial on how to go about setting that stop loss. And why is the stop loss important? Well, the reason the stop loss is so important is because it protects your capital. And in this market, which has been very, very volatile, you know, capital protection has been just absolutely paramount. So basically, what's happening today? Well, we've moved into an era where the reporting is starting for the retail, and Walmart put in a bad number yesterday. Target's putting in a bad number, and I think that, unfortunately, I think the hit train is gonna be moving gonna be moving on even more. Well, basically, here's the thing: all the retail stocks are getting hit, and that's why I will show you a short that I'm going to be doing on Ross Stores. They report tomorrow, but Target today had earnings that basically, this suggested that retailers are getting really, really hurt by inflation. People are just cutting back. I mean, the April quarter, the profit fell 41%, which is pretty amazing on Target. I mean, Target is one of the best companies out there, and yet they are suffering. So this is kind of what is going on. What is going on in the world? Well, look at this gap down. We were going great, and then boom, the numbers come in, and after hours, it actually declined 24.93%. Now, I do expect it to bounce tomorrow. But still, that is unbelievable. Look at this. The volume, 1,324%. That means that it was an absolute bloodbath. So my anticipation is that we're going to have some more pain in the retail sector. So not very exciting when it comes to it. Now, I do have some long holdings, and this is in the small portfolio. This is sort of how I am arranged right now. Basically, the only things I'm really buying are in either the agricultural area, this is Mosaic, or the big oils, Chevron, and then there's a company called Flex LNG, which transports many of the which transports the LNG, and of course LNG is in a very tight is very tight right now with the situation in the Ukraine. So that is also off, but everything was off that I had today in the small portfolio. So not necessarily a great look there. Now, in terms of everything that I'm holding, well, this is everything that I'm holding. Basically, Chevron, FLNG, Mosaic, Valero, that's also a refiner, and then Western Midstream. Everything was down today, as you can see. Now, hopefully, we'll see a little recovery in that as the week goes on, because these are the stocks that are going to benefit from inflation. Now, on the other flip side of this, I do have a portfolio, a short portfolio, and in that portfolio, I have a number of stocks: Disney, Boeing, Salesforce, Netflix, and Ross Stores. Now, these stocks were all down today, which will benefit a short portfolio. Here's the way it looks with the spreads that I have currently on. For Boeing, we're up about $510. For Salesforce, we're up on this bear put spread about $123. Disney up about $60. Why? Because as these stocks move lower, the value of these trades moves up. I'm down a little bit on Netflix of $26, but that is also starting to deteriorate as well. And then as of today, I opened a new trade on Ross Stores. And this kind of shows you kind of where it is. Well, as I am expecting this to retreat, and if it does, we will do well. The investment here for basically buying one June 17th 90 put and then selling a June 80 put on the same expiry was an out-of-pocket expense of $290, but I have a potential of making as much as $710. Now, this is if the stock retreats, and it's got to retreat a fair way, but by looking at the situation with Target and Walmart, I kind of expect this may happen. If the stock if Ross drops to 80 and below and stays there, then I will be able to collect the entire 710 on this one. So that's almost a 3-to-1, not quite, about a 2.5-to-1 leverage on this as it moves down. This is a bear put spread. Now, on the break even on this one is 87.10. So this is where I will set my alert. And if it goes above that, if it pulls down and then it goes above that, I will close the issue. But that gives you kind of an idea of sort of where we're headed. So I am definitely looking to, continue these shorts. Okay, well, let's see if we can get into some of the questions. So appreciate everybody here. I know this has been a really tough day, and it's probably very frustrating for everyone out there. But let's kind of go down it. Let's kind of go down the the charts. All right, Jay. Basically, thank you, Jay. Jay, I thought the relief rally was supposed to last 2 weeks. It was like 2 minutes. Well, I wish it would have lasted about 2 weeks. I was fully expecting that, but God, it's just wow. I don't know. We may be going down for a count. I think we may get a dead cat bounce tomorrow, but wow, I tell you, it is a tough market to trade. But we did have a relief rally for about 2 hours. You're about right. So let's look at the Nasdaq first and see if I can bring up see if I can bring up the Nasdaq Composite here, and let's kind of examine that to see kind of where we're going where we're going there. It's just ouch. It's not an easy market to trade. I will be the first to admit that. So here is the Nasdaq Composite, and as you can see, we were coming. I was fully expecting a bounce here. We're coming up, and then we bounced nicely. But boy, I tell you, those retail numbers really cut into things. And look at that. It just kind of came down, and then it bounced, and then boom, it's down again. So we will see it. We may be, the direction here is lower. I mean, there's no question about it. I mean, it is continuing the downward trend. And I mean, there it is. I mean, I thought that we'd get a little bit of a bounce. I thought we'd get about a 2-week rally, but maybe I could have been, too ambitious here. I mean, I could have been too, I may be too, optimistic here. So, wow, it's just amazing when you think about that. But we definitely did get that leg down, and there you go. I mean, that's just the long and the short of it right there. So let's take a look at the S&P, and what I'm going to do is I'm going to look at the spider. This is the ETF that covers the S&P 500, and as you can see, same action. Comes down, moves up, boom, and it's down today. And really, that's based on the retail numbers. Those retail numbers are just hurting us everywhere. So let's kind of look at the retail people that have already reported. WMT, that's Walmart stores. Look at that. This was yesterday. This is kind of what happened. Walmart was way off, and it just came right down here. So we may be in a very precarious situation. This is the gap down. This is a very significant gap down right here. I mean, this is definitely definitely something you don't want to see. is that amount of gap down. I mean, it's very, very, very big fall. Now let's look at Target that reported today, TGT, and again the same issue here with the gap down. It gapped all the way down, and this is amazing. Target is no small store. I mean, it's a major retailer, and look at that. It just dropped out of the sky. Again, look at that, even a larger gap down. So this is telling us that inflation, it's not only going to be, it's going to be intense. I mean, I think we're going to see, I mean, I don't want to be a negative Nelly here, but I think it's going to be even more intense. I think that we're just at the very beginning, unfortunately, if this is what it's showing. So I was expecting a relief rally like 2 weeks, and boy, do I have egg in my face today. It was about 2 minutes, I think. Wow, just man. So let's look at CVX. Of course, I do hold a lot of CVX. This is Chevron, and I do expect that even in a declining market, this should hold up. It didn't today, but I do believe it will, partially because gasoline is moving up, and it's moving up hard. Now, this was down a little bit to 168. This is where I bought at the buy point right here at about just right below 174. We're back down to 167, but I do think, hopefully I'm right on this, that we will see it move beyond the pivot, mainly because there is just so much. I'm looking at the 10-minute chart, but you notice right at the end of the day, there's a lot of buying coming in there. And I do think that we're going to continue to move up. I think everybody sold everything. But in terms of a stock right now, CVX, Chevron, it's, relative to everything else, and it's not a good scene, it's doing well. I mean, if you look at it, currently, we have a trending relative strength line that's going up, relative strength of 98, which has been basically the top 2% of all stocks right now. That just tells you how bad the market is. But look at this, solid sales growth, solid earnings. So in terms of this, I'm going to hold this as long as I can, because we've had a really nice move on it. Now, Mosaic MLS, this is another one that I hold. This one didn't quite fare as well. This is a fertilizer stock, but I still expect, with all of what's going on in Sri Lanka and many of those other places, I think that, this one may do well as well. I mean, I think I could see this one doing well, but, today it didn't, that's for sure. Today it didn't. It pulled back just like with everything else. I do have a stop loss on this one. My stop loss on Mosaic currently is 58.70. That's where my stop loss is. It's right there. It's basically, so hopefully we won't, it will turn around, or I may get stopped out. I don't want to be stopped out, obviously, but this is I'm not going to give up any of my capital here if I can absolutely avoid it. So that's kind of what Mosaic is looking at. So I'm going to be holding Mosaic here. My stop on Mosaic currently is 58.70. So that's where I am putting my line in the sand. As you see, we're fairly close. We're at 61, and we pulled back. And then the question is, will we get some support? I think that we'll see, because it's in a kind of a consolidation. So we will see if that indeed is right. I could definitely have egg in my face this one. Oil stocks, hold or sell. You know what? I'm holding I'm holding oil stocks because even though I did pull back, let's look at the XLE. Now, the XLE is primarily made up of Chevron and ExxonMobil, and as you can see, we did have a pullback on we did have a pullback on the XLE today as well, but we're above that pivot, and so I'm still holding out hope anyways that the oil sector will be the one sector that does hold up, but we'll see. I've got my stops in, and if it doesn't work, I'm out. That's just the way it is. Hey, thanks for watching from Lynchburg. I love your whiskey. That'll probably do well. That'll probably do well. Thank you very much for doing that. Okay, this market is an absolute bloodbath. A lot of people not realizing we're just getting started. I think you're right. Unfortunately, that's one of the reasons I'm trying to emphasize some of the shorting, because I do think that, even if the market is going down, you can still make money as the stock goes lower. And that's what I've tried to do with the put spreads that I have out. I have 5 put spreads currently. And I'm not saying that, it's the end all be all, that, it makes it always works, but it does work. I mean, here's the thing. I started shorting Boeing on the 27th. Then I moved into Salesforce on the 2nd. This is the 2nd of May. And as these move lower, they tend to move higher. Now, I did have another short on Disney. I closed it right before earnings, fearing that we would get a dead cat bounce. I shouldn't have been so afraid, because it just continued its route downward. So I'm up on that one. Now I'm down a little bit on the Netflix one, but I do believe very strongly that Netflix will move lower as well. And if it does, we will make money on that. So if you are on the action trade alerts, and you can do that, of course, by going to www. Dallas Trading Floor. So let's look at Netflix, NFLX. That's right. Is that right? No, I'm not right. NFLX. There we go. Now Netflix, has that commanding space in. It has that commanding space in streaming, but they're saying that by the end of the year, they're going to have ads to make their numbers. So things are changing. This was down after hours as well. It was, it's starting to make its move downward. I think this will move lower. This is where my short was. And then we moved down, and then we kind of had a dead cat bounce, and hopefully we're moving lower. But I do believe I have a little bit of time on this one, but this is a way that we can make money in a downward trending market. Now, it's tougher to make money in a downward trending market. There is no question about it. But if we move in a down, so here's kind of my advice for what it's worth, and it may not be worth very much, but my advice here is that we want to kind of look to see what is the strongest sector. So basically, to be long in a stock, you want to be in the absolute strongest sector, and at least since the last 3 months, that's been oil. So that's kind of where you got to be if you're going long. The rest, we want to look for weakness and then short. I like to use the bull put spreads. Why? Because it limits the risk on the downside. That's the main thing. Because one of the things about shorting, you have to be really careful, is that it can snap back at you. And if it does, it can be very, very painful. So that's kind of what I wanted to put out there. By the way, if you are interested in kind of, my little newsletter here, we have quite a few thousand people that are on this. www. Dallas Trading Floor. You can definitely take a look at it. And if you're looking on TikTok, very easy to do. Just go to my profile, click the link, and you'll see. You'll definitely see that. So definitely take a look there, and you just get on the list, and it's free. By the way, that's free. Okay, so let's look. Charles, thank you very much. I'm with you. Yeah, FLNG. Well, right now, Europe is short of natural gas, and they need natural gas to generate electricity, because unfortunately they decommissioned a lot of their coal and nuclear plants. So they were getting it from Russia, but with the war, it's not working out too well for them. So they're having to import a lot of natural gas. And there's not that much transport out there, but this is one of the companies that does have transport, FLNG. Now, I'll show you my entry on this one. It was did I put it? Oh, I didn't. Let me see if I put my entry. I should have put. I'm trying to make sure that I mark every entry that I have. Sometimes I get busy and I don't. So I didn't mark the entry on this one. But this is my stop loss right here. I have a stop loss on this one. So if you do buy it, you might want to consider this stop loss 26.38. is my stop loss. And why? Because that's where the 50-day line is. But I do, even though it did pull back today, I think we're going to see some strength here. Why? Because frankly, there's not enough ships out there that can move the metal, that can move the merchandise. This is a company that can. So hopefully we'll do well. Now, one of the things that's a little bit concerning here, we did have a decrease in sales, but look at their profits, they're up. So I'm confident they're going to be making profits. I don't know if their sales will be up or down. Just depends on their capacity. But look at this. This is the kind of stocks right now that are being prevailing in the market. And this is kind of one of the things you want to look at. If you'll notice, the PE ratio, this is the price to earnings ratio, is a 9. Okay. Now let's compare that to another great stock out there, but is hurting, and that is NVIDIA. NVDA. This is why you don't want to be in the techs right now. Look at NVIDIA. This is a best of breed. It's a 41. And by the way, this is one of the best PE ratios that you can get in the chip sector. So 41 compared to 9. So that's kind of what's happening. That's sort of that's the tale of two cities. Now, normally I don't buy stocks that have necessarily low PEs, because typically in growth stocks, they're looking towards the future. But right now, there's a lot of fear in the market. Remember, it's fear. The way the stock market works is it's greed and fear. We're in a fear area here right now. So everybody's looking towards those PEs. So I tend to lean more on the low PE side, and also in the sectors that are doing the best. And right now, that's oil and gas, or things related to oil and gas, like transporting it. And that's where FLNG is. But thank you so much for that comment. Really appreciate it. All right, so let's take a look at coal. Coal stocks. Wow, can you believe we're actually talking about coal? I mean, it is the 21st century. But what is old is new again. It's funny. It's like, you would have thought that coal would have gone out with, I don't know, with the Victorian era. You think of it that way. At least I do. But it's right now. They're desperate for coal. Why? Because that's what they're generating electricity from. Wind and solar aren't working as well as, everybody thought they were going to work. I mean, and it's funny because I've been around long enough to realize that, sometimes it's just, sometimes you just got to get back to the basics. And right now, at least from the way I'm seeing it, coal, it's the number one sector. So let's kind of look at the stocks that are in this. Look at this chart. It's a good chart, moving up basically since June of 2020. It's just been a straight run up. This is a relative strength of 99, which is phenomenal. I have to tell you, that's phenomenal. So let's see if we can find the best setups that are in the coal area. Now, this is not a really area that I'm all that familiar with, believe me, but it is an area that can be traded. One of the ones we want to look at is on this is NC. This is a NECO Industries, and it's based in Cleveland, Ohio, and it's looking pretty decent. It's a little extended, so I probably wouldn't buy this one here just because it's kind of extended, but this has a relative strength of 99. Let's see if we can find one that's setting up in this group. That's the main thing right now, is we don't want to buy stocks that are extended. And unfortunately, that's not the easiest thing to do, believe me, in this environment. So let's find the ones that are closest to their all-time high. NRP probably is, again, this one, I'm looking at the weekly chart here, by the way. This one is just kind of stair-stepping up, and it's looking pretty good, but extended as well. So this is the issue that you're going to have buying anything in the coal area. I don't have any coal stocks, and this is primarily why, because they are all extended. So what does it mean by extended? Well, a stock will have a basing. This is called a consolidation base, and then it will move out of the consolidation base. And when it moves out, that's where you want to buy it. But if it gets too far above that pivot, And the case, that's definitely the case here for this one. Natural Resources Limited Partnership, the pivot was 34.92, and currently it's 47. So you don't want to buy it, even though it looks really great, because this may pull back, and it may pull back hard. That's just typically the way it is. When you want to buy is when it comes out of a base and over and up about 5%. That's it. So I will definitely take a look and see if we can find any good coal stocks. But right now, I'm not seeing a whole lot, a whole lot of opportunity here. I'm not seeing a whole lot of opportunity. All right. Well, you should not be in. That's a good question. That's a Bitcoin 1,000. You should not be in the market until September. That's not a bad idea. That's not a bad idea. It's tough. It's just a tough market to trade. Here's a good one. Interesting. Bitcoin 1,000 short Bed Bath and Beyond. Let's see if we can come up with. This is coming from TikTok. Thanks for that. I think it's BB. What is it? BBY? No. BBY, is that it? I can't remember what the. Let me see if I can get the symbol for that. No, it's Best Buy. And what I'm doing is I'm looking up the symbol. Okay. Why are we not getting the? Yeah, I think you're right about this one as well. I'm not bringing it up properly on the screen, but definitely one that you definitely could do. Jay, don't expect to turn around anytime soon, and don't count up the days. We still have 23. Yeah, I think you may be right. I thought we were going to get a dead cat bounce here, a relief rally, but it may be an escalator down. We may get a relief rally though, because when you have these pullbacks, typically they have these very violent relief rallies, typically that last 2 to 4 weeks. So we could still see another one of them. But I definitely, the trend in the market is down. So definitely, we're definitely, that's true too. Short Under Armour. Let's look. I did make some money shorting. Don't short Lululemon, boy. I tell you, I lost some money doing that. But you're right. Look at that Under Armour, boy. It's not looking good. It's looking pretty stinky. Yeah, it's definitely looking pretty weak here as well. So yeah, I agree with you. This is this is definitely one that it does not look good. It's definitely one that you could. There's not a whole lot left though. That's the problem when you get down here. There's not a lot of meat left on the bone. We're at about 10. So, here's where I tried to get it back in this one, and then I was out. So I haven't been fooling with Under Armour since July of last year. So, and that's really kind of where it was at its peak. And then I haven't really done with anything with it. But you're right. I think Under Armour definitely could be going lower too. I mean, it's going to be tough for all any of the retail brands. Oh, Arch. Yeah. I think you're right, Charles. Arch. Yeah, let's look at the chart on Arch. RCH. The biggest one is BTU, and that's Peabody. And we probably should look at that chart too. ARCH. But thanks for coming up with the symbol for me. I appreciate it. Yeah, this is a good chart. It's looking a little bit extended though, unfortunately. The last base that we had was this cup with handle, and the pivot was at 104.70. We're currently at 159. So we are extended. So it's a little bit tough place to buy it, but it looks like it's pulling back to the 10-day line. That's an alternate buy point. You can go in and, obviously the best is to come out of the pivot, but sometimes that doesn't give you a really high flying stock doesn't give you that doesn't give you that opportunity. Here's what you can do though, is you can draw that little trend line here, and if it moves above that trend line, that would be possibly a place that you could buy it, because what's happening is, as you'll notice, it is basically staying above that 21-day line. That's this green line here. And then it's pulling back and then gathering strength and then moving higher. So if it does reverse off this 21-day line, which I think it might, 159 is the price for Arch. Let's kind of see where that where the 21-day line is. Yeah, it's 161. So we're just below that 21-day line. Very, very likely, based on this chart, if we don't get too much interruption here, very likely to move higher. So I've drawn this trend line here, and if it moves above that trend line, that may be a place that you could get into this. This is definitely one of the best ones out there. Let's look at BTU. That's Peabody. They for years were the biggest, and I just don't know how their chart is. I haven't looked at it. Don't like the chart as much as I like Arch. I agree with you, Charles. The Arch chart is better than this one. This is pulling back, and it's looking like it's trying to stay above that 21-day line. So there might be an opportunity here. Not really a good entry point, though. I'm not really seeing anything. I'm not really seeing anything great to enter here. Let's just see what the pattern rec says to see if see if there's anything there. It's only a 56 relative strength, so probably not what you want. Let's look at the pattern rec. Let's see where the last pivot was. That was basically a pivot at 39.45. Wow. Okay, so it's well below that. It's basically moving lower. So you don't want to do Peabody. That's not going to work very well. So I think you're right. Arch could give us another opportunity. I did put in a little bit of a trend line, and so we could get a trend line breakout, and that would be not so bad. Okay, question from Lowe's is at a solid price right now. Well, I know, but the problem is the whole market is discounting the retailers, which is sad because Lowe's is a great store. But I think it's LOW is their symbol. Let's take a look and see if I'm going to, yeah, there we go, Lowe's. Okay, so let's look at the chart for Lowe's, and we're looking here at the weekly chart. We definitely have a downward trend, and unfortunately, maybe it is fairly priced, but the sales were off. The profits are still looking good, but here's what I'm seeing. I'm seeing decelerating earnings. Unfortunately, I just wouldn't want to be in this one. This is a downward trend. So I would not be a buyer of Lowe's. I wouldn't be a buyer of Lowe's here, just because it's still in that trend. And that trend, remember, the trend is your friend, as they always say. The trend is moving downwards, and it looks like we're going ever lower. So I would not I would not be a buyer right now of I would avoid I would avoid Lowe's right now. Just my humble opinion here, just because of the trend. It's a solid company, but the stock market, Lowe is in a downward trend. So I'd be careful. I'd be careful here. I don't see a reversal. If I saw a reversal, maybe I would be more interested. But I see a downward trend here, so I don't see where you could buy this one. I think it would be against you if you did it here. All right, but thank you very much. All right, 426 was when I said to short Boeing. Actually, that's a good question. That's a good thing. I've been in the Boeing short for a while. This is a bear put spread. I did that, of course, to limit risk. But let's take a look. Let's take a look at where we shorted here. I'm moving to the okay. Does it have it? I hope it does. Showing it. There we go. All right. So on the weekly chart, on the daily chart actually. On the daily chart, I actually did annotate this one. Oh, did I get it? All right. So this is where we went into that bear put spread here. This is on the 27th. Now let's see, 26. Yeah, okay, great. You were absolutely right on that one. 26 is you indicated that. I did short it on the 27th, and as you can see, we've moved down solidly since. So I'm not going to close this one yet, and it seems to be working pretty good. So thank you for that. I appreciate that very much. All right, man, BAS, some good news today before or yesterday. So 50 or so. Okay. It's not that it's bad. It's just that Boeing should be doing better than this. That's all. I mean, it's just going to take it in the shorts. I mean, unfortunately, TJ Maxx is up today after earnings. So are you sure it's safe? Well, I'm not sure. I'm not sure. I could get whacked on. I mean, I'm just sticking my neck out here, but I don't think that. I think in the long term, in 30 days, I think Ross Stores is going to be lower. That's my guess. But hey, I could get whacked. And that's happened to me many a time. So you might be right. You might be right on that. And if it is, we'll have to close it. So half the numbers they report aren't even accurate. They keep saying they're up. I think it's false. I agree. We've got stagflation in this country. It's very tough right now. It's very, very tough right now. And unfortunately, you're right. I wish you weren't, but it's so amazing. We really screwed ourselves in this country. We had a situation where we had the Keystone XL pipeline that was going to come in and take all that crude from Alberta and right down to Houston, and we wouldn't have $5-6 diesel. And that was the first thing that this president did was to cut the XL pipeline. And then it just compounded from there. But just amazing. Sad, but just absolutely terrible. All right. From Brian, thank you for tuning in here. Let's look at Home Depot HD. And I think, unfortunately, Home Depot is also going to be kind of in the same situation that a lot of these other retailers are in. I just think that this exhaustion. I think right now the market is telling us that people are just hunkering down. They're buying canned goods. They're buying canned goods and they're stocking up on beans and rice because and everybody says that the employment market is super strong. I'm not so sure. I don't believe it is. So I think we're in for some pain. I wish I'd say that we weren't, but boy, I think we're in for some pain. All right, Bed Bath & Beyond. Thanks, Kat. So appreciate it. You getting that for me? That's so helpful. BBBY is the symbol for Bed Bath & Beyond. And wow, that's a bad looking chart. Woo. That is not a chart that you want to see. I agree with you. I think that may be a short in the making. Wow, look at that. It's below that 200-day line. Can you short it here? The problem, here's the only issue that I have with shorting it here is that the fact that it's basically all the juice is out of it. See, it's like a $10 stock. So there's not much juice in it. And yeah, see, we're up here. Obviously, hindsight's 20/20, but you would have wanted to short it at 50. Yeah, but let's look at a stock that may still have some juice in it, may be shortable, and that's Roblox, RBLX. I want to check on this one. I haven't looked at this one in a while. Look at that. That's spectacular. It's still at 32, so there's still some juice here. This was all the way up at 140. Look at that. Wow, not long ago either. I think that this one is potentially also very shortable as it comes up to that 21-day line. This could give us another opportunity to take some profits here. And the way we do it, I would do it anyways, would be with a bear put spread. Because look at what's happening. If you'll notice, since December, it has been trading below that 21-day line. Now, why do I talk about this 21-day line so much? Well, a lot of the algorithms trade on this line. It's a 21-day exponential moving average. And if it's trading below that, that means it's trending lower, obviously. But this has got all the good signs for a short. The 50-day is below that 200, so that's looking good for short, not for stock. But you'll notice it came up here. It tried to move above the 21-day line, no moss, and it went below it. And look, it's trying again. I suspect this is going to go lower. So I agree with you, Kat. This may be a very good short. This may be a very good short. And so I'm going to put this down on my list to see if I can come up with a BBBY short, bear put spread on it, or a bear call spread. Probably a bear put spread would be the better one here. But boy, thank you for that. Thank you for looking up that for me. Appreciate it very much. All right, let's Mr. Jeet. Always a pleasure. CVE. Let's look at CVE and see if there's anything there that we can look at. Yeah, well, it's an energy company, as you can see. Take a look at the chart. It's moving up. Now, would I buy it here? Yeah, it's a little extended for me. I don't like to buy anything. I know this is kind of getting picky here, but I don't really like to buy anything more than 5% above the 10-day line. It's 4% above the 10-day line, but this market is not cooperating. I mean, the oils were down today, so I would be a little bit careful buying it here. I kind of want to see it a base. I mean, the last base that we had on this one on a consolidation was a stage 3 consolidation at 1348, but it's well beyond that. So I think this one's extended. So I think this one is extended. So I would be careful on this one. So CVE is extended. So I wouldn't buy. Try in this market. You never want to buy an extended stock, but you never want to buy an extended stock, but it's especially true in this market where it's just so it's so unforgiving. So I would not look for that one to go long. Let's look at Zim. Of course, this is in the shipping area, and this has just been a dividend monster. But the question is, can it continue to do well? And I think I think Zim is starting to base. I don't think it's going away, but I'm looking at some signs here that I don't necessarily think you want to be in it. It had some earnings. Let's look at those earnings. Just came through those earnings, and they were spectacular. That up 113% in terms of the sales, up 190 in terms of the profit. So this is a very profitable stock. It's an RS line blue dot, which is a very good thing. But I don't know. I do like the fact that maybe reversing here. I'm a little gun shy right now. So what I would look to do is see if it can move above the reversal line. Let's take a look, see if we can draw a reversal line here. I think that you kind of got to look at possibly a reversal line like this in order for it to make sense. Let's see. I'm going to set an alert on that line, and basically what that is that it's pulled back, but I don't really want to buy it until it makes its move above that reversal line. But I do like the company. I do like Zim. I mean, I've been buying and selling it. As you can see, it goes way back here to August. I've done well with this stock, so I like the stock a lot. It looks like it's gathering steam, but I just don't want to buy it until it moves above that reversal. And what I would, based on this line, I would say I want to see it come above about 87 before I buy it. So we're a little bit shy of that. And I think that we need to see it go strengthen a little bit and move past about, not 87. That's terrible. I gave you a wrong answer there. Move above about 67. So we're about 6%. We're about $6 away. So we're about 10% away. So let this thing move up about 10%. If it can hold that reversal line, then I think you might want to look at it possibly to do it, because it is in a good area. It's a strong stock, great earnings. It's just, and it looks like it's pulled back, and maybe we can get it on the reversal. So let's look at KRP and take a look there to see if we've got anything going. Kimball Realty Partners. Okay, this is a REIT. Oh, no, I'm sorry. So oil and gas. I'm sorry. This is a US E&P. Okay, so this is a royalty. Is this a royalty trust? Yeah, okay. Royalty interest is royalty trust. Okay. Well, these royalty trusts have been doing well. It's not far above the, it's not too far out of the profit. I mean, too far out of the buy zone. It is a little bit extended though. So there is another one in this group, Prudhoe Bay Royalty Trust, which also you might want to look at too. But here's the thing. I think Zim is buyable if it moves above about 67. That's what I'm seeing. I don't think you want to touch CVE and KRP. I'll put in some more. I'll put in some more work on that one. But that's great. Thanks for bringing that up, putting it on my little list of things to go. All right. Well, thank you, everybody. Thank you so much. Obviously, if you're not, if you're not already a member of the Action Trailer, please, if you can, this really helps me. I know that I sound like a beggar every time that I mention this, but please do like this, because it really gets us out. It really gets us out there to a lot of people, and by doing that, believe me, it helps a lot. It helps a lot, very much. So please like this. I really appreciate. Hello, everybody. Oops, wait a minute. I really like that. So please like this thing, and let's see, and also, if you're not already a member of the Action Trailers, go to www.dallastradingfloor.com. Really appreciate that. I'll be back tomorrow at 5:00, and so hopefully I'm going to do a little bit more research. We're going to try to do some more shorting here, and so hopefully, even in this down market, we're going to try to make money in it. So thanks so much for tuning in. Please tell your friends. I really appreciate it. And sign up for www.dallastradingfloor. So thanks a lot. I'll see you tomorrow. Happy trading.